Good morning and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX listed companies. I'm Jane Morgan and thank you for joining me today. Today we are joined by four companies: Altech Chemicals, Vanadium Resources, Impact Minerals and Cobre Limited. So up first we have a presentation from Altech Chemicals with the ticker code ATC. To tell us more about their high purity Illumina project, today we are joined by Managing Director, Iggy Tan. Good morning, Iggy.
Good morning. Thank you for having me. So firstly, welcome. Altech Chemicals is an Australian company. We're listed on the ASX. And what I want to do is to talk about the future of lithium-ion batteries, because high purity alumina fits into where lithium batteries are heading to. And I guess it's fair to say that the vision of lithium-ion batteries have been set by Tesla, and they have announced in their last battery day that they want to halve the cost of their production. And they've launched their new cell, the 4680 cell, which is 5 times more energy and 6 times more power. They've also announced that they want to have 3 terawatts of battery factories by 2030. And that's equivalent to 20 gigafactories around the world. And the other thing that was interesting when they announced the battery day was the increased use of silicon in the anodes. And I want to talk about the future of silicon and how HPA fits in as well. In a lithium battery, on the positive side, you have the cathode material. And when you charge a battery, essentially the lithium ions go from the positive side to the negative side in the graphite. And when you discharge the battery, the lithium ions go back from the graphite side, but 10% of the lithium is actually left on the anode side. And this is called the first cycle lithium loss capacity. So before the customer even gets a battery, 10% of your lithium becomes inactive. And essentially, what happens in a battery, the lithium coats the graphite particles and it forms an SEI layer around the graphite material, and all the lithium becomes inactive. So this is a big problem for the battery industry, because 10% of your lithium doesn't take part in the future of the battery. Also, during the performance of the battery, there are cracks that happen in the SEI layer, and then more lithium is absorbed. And also during the performance of the battery, hydrofluoric ions in the electrolyte breaks down the SEI layer, and then more lithium is absorbed onto the particle as well. So there's a continued degradation of lithium on that graphite particle. Now, why is alumina being used in the graphite side? It's been proven by a lot of research around the world that it improves the first cycle loss, improves the high rate performance, and improves the fast charging capability, and also improves the safety of the battery. So for example, this is a typical work that's been done where uncoated graphite versus coated graphite shows that the coated graphite battery has 10% more energy capacity after 200 cycles. So this is very important for the future. This is a great example of the coated graphite with alumina affecting the safety of the battery. So on the left-hand side is a nail penetration test. It shows that the battery virtually combusts. Temperatures get up to 600 degrees. And on the right-hand side, the batteries are basically intact, and the temperature only gets up to 90 degrees. So coated graphite with alumina helps with the safety performance of the battery. Now, there are 3 ways of coating alumina onto graphite: the vapor method, solid method, and the liquid method. And the vapor method are atomic layer deposition, but it's very costly, complex, and it doesn't lead to mass production. We're focused on the liquid method, and it's really the most promising and easy to commercialize method. So essentially what we do is we coat a graphite particle with a fine layer of alumina, and by having an alumina layer, it stops for the lithium from forming on the graphite material. We also find that any other hydrofluoric corrosive material is absorbed by the alumina layer, and it also would help with the lithium degradation. And what it does is, when we coat the graphite, this is what we are aiming to have: a reduced first cycle loss, which is an extension of the battery life. We've done this in the laboratory. This is on the left-hand side is a graphite particle with our alumina coating. And you can see the very thin continuous layer of alumina at about 2 nanometers thin, very, very thin particles. We've taken it to the battery test now, and we've gone coin battery test, and it shows very positive performance in the battery. I want to talk a bit about the silicon as a future anode material. Silicon is a very promising material in anodes. It's got 10 times the capacity of graphite. So from a layman's point of view, there are 10 times more sites that the lithium can sit on. So if it's that promising, why isn't silicon being used in commercial batteries today? There are really 3 problems. First one is that there is a volume expansion of the silicon particles where it fractures. Number 2, instead of the first cycle loss of 10%, it's close to 50%. So 50% of lithium is lost. And also it has a higher fade in the battery. So these are some of the 3 problems, but the potential for silicon is enormous. So this is a graph that shows graphite material at 372 milliamps per gram. If you add 10% silicon, it jumps to 693. 20% silicon, it goes to 1,000. And you can see the potential by adding silicon in the battery. I mentioned about this fast fade. This is what happens with silicon if you don't resolve the 3 problems. It actually is detrimental to the battery. So what we have is this fracturing of the silicon particle on lithiation. And also, when it does fracture, it has delamination on the anode side. And this is a big problem for batteries. We believe that we have technology using the alumina coating technology to resolve this fracturing problem. So we believe that our alumina coating can resolve this fracturing problem, and it will be a big game changer to the lithium-ion battery industry. On this slide, it shows our silicon particle with alumina coating. We've now taken it to batteries, and we've seen very promising stability results. And obviously there's a lot more work, but it's a very promising future for our high purity alumina into lithium batteries. Now, this is a great example of how this can impact in the end product. This is a Tesla Model 3 with 0 silicon. It does about 400 kilometers on the first charge. If you add 10% silicon into that battery, it goes 700 kilometers on a single charge. 20% drives it to 1,000 kilometers, and 30% 1,300 kilometers. So the potential is enormous. So our future is using our high purity alumina to coat graphite particles, silicon particles, and put it together in an anode of a battery. So to feed that material, we are doing a pre-feasibility study on a battery materials coating plant in Germany. Germany fits into the European strategy. We're very much focused on Europe because essentially the story of the lithium-ion battery will be Europe in the next decade. There's some 600 gigawatts of battery capacity being built in Europe, all driven by regulations. And we are very focused on providing our high purity alumina into Europe. If we come back to our high purity alumina plant that feeds that to the European coating plant, our project is well developed. High purity alumina is used in lithium-ion batteries as well as LEDs. And the growth of the business is expected to grow from 30,000 tons to 270,000 tons by 2030. And there's a shortage of supply forecasted. Our project is well developed. We've got a mine in Australia with 250 years of mine life material. Our processing plant will be in Johor in Malaysia. We have disruptive technology in that we have a low quartile costs. We have patent protection, and we have been accredited as a green process because we essentially use 49% less greenhouse gases to make the same ton of HPA as the current production. We also have a 10-year offtake Mitsubishi agreement, and we have a build contract with SMS Group for a fixed price and guarantees of the process and the quality and so on. I just want to give you an update of where we are on the financing. To date, we've spent 50 to 60 million in the development of the project. We've conducted the stage 1 and stage 2 construction. The NPV of the project is about $500 million US. The EBITDA is about 76 million per annum, and we are targeting the project use of funds of 390 million. 190 million of senior debt has been completed with KfW IPEX Bank, and we're now progressing to the secondary debt, which is the listed green bond process. We're targeting 144 million of green bonds, of which 100 million will go through as secondary debt for the project. Now, a lot of work has been done. We've done all the the group that is doing it out of the UK have done all the due diligence. They've conducted all the legal due diligence. The prospectus and the facility agreement is largely completed, and we will be looking at that company to start the marketing process during the next quarter. So far, the soft sounding of the green bonds are very positive, and while we're working on that, we also have various mandates to look after the project equity part of the project. And as you know, we've commenced construction on the Malaysian site, really to de-risk the project, and so that when the funding comes through, we're in a good state to commence the project. So thank you very much for your time.
Well, thank you for that, Iggy. One of the questions actually has come through. You just did answer it, but I will ask it again. So do you still plan to proceed with the construction of the processing plant in Malaysia? And if so, how is the design proceeding?
Yeah, so we have now are waiting for the finance to come through. As soon as the finance comes through, we will have a running start in Malaysia. The reason we started the construction process, we built the maintenance building, substation, underground tanks, is that we can de-risk that project. So we know the ground conditions, we know the contractors, we've got all the permits to get on site. And generally when finance comes through, there's always a delay in getting your permits, environmental permits to get on site. We've de-risked all that, and essentially the project is ready to go when finance comes through. So the project will be built. We are now just trying to finalize the secondary bonds.
Wonderful. Well, thank you for joining us today, Iggy. And of course, a copy of today's presentation will be available online on brokerbriefing.com in the coming days. So up next, we have a presentation from Vanadium Resources with the ticker code VR8. To tell us more about the company's South Africa and Australian vanadium projects, today we are joined by Managing Director, Eugene Nell. Good morning, Eugene.
Good morning. Thank you very much for having me this morning. I'll just quickly get my presentation up. I hope that's visible on that side.
Yep, you're good to go.
Great, thank you very much. Well, today I want to tell you a little bit about our Steel Put Drift project, which is our flagship project, which is one of the world's largest and highest grade vanadium projects for a new green era coming up. If we look at vanadium, the major demand for vanadium historically has always been in steel making. It makes up about 90% of the world market. Vanadium is used to strengthen steel, gives it tensile properties, and it's especially used in rebar. The other 10% of the market is then made up of chemical uses, the aeronautical industry, and then the big growth market that we see forward would be in the use for vanadium redox flow batteries. And it ties up actually quite nice with the presentation that Iggy just did. If you look at the renewable age, if I can use the old fuel or oil type analogy, the solar plants and your wind farms, they're basically your refineries. They produce the energy. where lithium and the silicon batteries comes in. That's what sits in your vehicle that you charge every few days. But in between, you need the bulk energy storage because the wind doesn't always blow, the sun doesn't shine. And that's where vanadium redox flow batteries fit in. They're essentially your gas station between your solar farm and the end user. The benefits of vanadium redox flow batteries are that they've got an unlimited cycle time, so you can charge and discharge them as many times as you want, unlike conventional batteries, which is very important for that bulk energy storage systems, because you might charge and discharge a couple of times a day compared to a vehicle that you'll only charge a few times a week. So there's a big market that's starting to develop around the vanadium redox flow batteries. According to Bloomberg, if you look at the battery boom, the growing energy storage investments are going to grow exponentially over the next 5 to 20 years. And this is both in the bulk energy storage and the smaller energy storage units. The current projections are that there's probably going to be around a 30,000 ton per annum shortfall in the supply of vanadium. And there's multiple factors that actually contribute to that. This is not only due to the growth in the vanadium redox flow battery market, it's also post-COVID, a lot of the governments have instituted big infrastructure builds. The United States wanting to spend $1.2 trillion. Now, to build infrastructure, you need steel, and you need rebar, you need reinforced steel. In addition, China has placed a cap on their own vanadium production because of the emissions that they're trying to curb on their smelters. China is mainly a secondary producer of vanadium. So there is a big shortfall looming in the vanadium market in the next 2 to 3 years, with no new projects on the horizon in the next year or two. We look at where our project is situated. Our project is situated on the eastern limb of the Bushveld complex. It's one of the premier mineralized deposits in the world. The Bushveld complex contains about 75% of the world's platinum group metals, chrome metals, and vanadium in primary sources. Around our operation or our project, there's within a 20-kilometer radius, there's about 10 to 12 other major operations from companies like Glencore, African Rainbow Minerals, Anglo American. So it's a well-serviced, well-established mining environment. All the infrastructure is in place. We literally 2 hours drive from Johannesburg, where more than 90% of the processing plant will be constructed and manufactured. So in that sense, it's easy to operate, and it has an impact on reducing our OPEX and CAPEX costs. Now, if you look at any mining project, there's 4 pillars on which it's built. First off, you need to have a big enough resource to be able to operate for long enough to give you life of mine and to give you flexibility. Secondly, you need to have that resource in a shape or form that it's easy to mine. Now, if you look at our deposit, if you can imagine a 10 to 30 meter wide block of magnetite from surface slowly dipping to one side. It's extremely easy to mine, which reduces our OPEX and CAPEX. What I didn't mention on the size of the resource, we currently sitting on around 660 million tons of JORC compliant resource. So we've got the big resource, easy to mine. Third, you need to have the grade in the ground. The higher your grade is, the less you have to mine, the cheaper it becomes to make the same amount of product. We've got one of the highest grade deposits in the world, in the top 2 in the world, with a high grade component of about 180 million tons, grading at between 1.1 and 1.2% vanadium in situ. So with such a high grade feed source, we can significantly reduce our operating costs. And finally, my favorite topic, metallurgy. you need to have the metallurgy in the ore to make it easily extractable and easily upgradable. Now, our ore body upgrades extremely easy. We can achieve a 2.2% concentrate grade. And then our final product is a 98% vanadium flake, which is suitable both for the steel making industry and for the battery producers and the chemical industry. So it's got a wide range of markets that it can go into. If you look at our resources, I mentioned size-wise and grade. The middle column is our total resource, and the lower column is just our high-grade component. And as you can see there, we are by far the biggest deposit compared to any other new projects coming online. We've just completed the pre-feasibility study. The target of the pre-feasibility study was based on only 12% of the resource. It's no use we go and we flood the market with massive amounts of vanadium. So we only targeted 12% of the resource. That gives us a 25-year life of mine. So quite clearly, we can either expand laterally, increase capacity, or we can extend life of mine, depending on what the market requirements are during the project. If you look at the fundamentals around the pre-feasibility study, we'll be constructing a salt roast leach plant in conjunction with a mine and concentrator at a capex build of approximately $200 million US dollars. It takes about 18 months to build, after which we'll be producing 12,500 tons per annum of V2O5 flake at a grade of greater than 98% purity for the first 6 years of operation. Then, as part of the PFS, we've also included an expansion capex of around 150 million in year 6 of operations, which would then take our production capacity up to 18,500 tons per annum for the balance of the 19 years. On average, we're going to be producing just close to 40 million pounds per annum of vanadium flake at an all-in production cost of $3.08 per pound. If you look at the financial returns around the pre-feasibility study, it showed an EBITDA over life of mine of $5.8 billion, per annum around $231 million. The NPV at 8% after tax, 1.2 billion, with a attributable portion to Vanadium Resources of $884 million. The average free cash flow per annum is just short of $140 million over a 27-year life, with a payback of 25 months and an IRR of 45%. We look at the timeline that we're going ahead. The DFS portion, so it's the next stage, is going to kick off in the second half of this year. And in conjunction with that, we'll also start looking at offtake agreements. We'll make an investment decision towards the middle of next year and commence construction towards the end of next year, with concentrate and flake production then kicking in first half of 2024. So why are we world-class? Why is this a world-class deposit? It's got phenomenal financial metrics, got a very competitive OPEX and CAPEX, the lowest quartile in the world. We're only mining 12% of our resources in 25 years. We've got the option to extend past the 25 years, but you know that's real crystal ball gazing. So we kept it at 25 years purely for practical reasons. The extended resource that we've got available does facilitate debt funding for construction. And then we've also acquired ESG technology that could unlock the titanium and iron products that's concurrent in our deposit. We've got about 12 to 13% titanium in our deposit. And with us having such a big resource, we do have the feed for that envisioned ESG plant available without affecting our baseline process that's based on the salt roast. Thank you very much. If there's any questions.
Well, thanks for the presentation, Eugene. A webinar attendee has asked, so is there a difference in the grade of vanadium used in rebar versus the vanadium used in VRFBs?
VRFBs require a grade greater than 99.5%. So generally, if you produce a flake, there's some of the VRFB manufacturers will have an intermediate step as an upgrade. In rebar, there's two products that they use in the rebar. The one is they use the ferrovanadium as is, and then you add the 98% flake as a sweetener to increase your grade or to fine tune the mix in the rebar.
Wonderful. Well, thank you. Thank you for joining us again today, Eugene. And of course, all presentations will be available online at brokerbriefing.com.
It's a pleasure. Thank you very much, Ina.
So next up, we are joined by Dr. Mike Jones, Managing Director of Impact Minerals, with the ticker code IPT. To tell us more about their Australian exploration projects, I will now hand you over to Mike. Oh, Mike, are you there? Sorry, Mike, we might just need you to stop sharing your screen for a moment. You just need to unmute yourself. There we go.
There we go.
Much better. There we go. Yep, I'll just get you to share.
Good morning, everyone. There we go. Now we can see. Okay, let me just share the screen here. So that's, can you see that okay?
That's brilliant. Thank you.
Okay, that's great. Yeah, thanks very much, and great to be speaking to everyone this morning. Look, just a quick overview of Impact Minerals. We have got three major projects that we're focusing on at the moment. Broken Hill for nickel copper PGE, and Dunia, which is for gold in Western Australia. And then we've also got a recent drill program completed at the Commonwealth project in New South Wales. And we've been doing some early stage work at our Arkham project in Perth. So I'll just give you a quick overview of where we're at with all of those things. We've had a very busy 6 months, and so far we've done a couple of drill programs, one on our Commonwealth project and another one at our Broken Hill project. So our strategy is we are looking for the big world-class discovery. That's what Impact is about. That's what we've been trying to do for a number of years now. And I think that in the next 6 to 12 months, we've got the best chance we've ever had of finding something significant, and certainly to give ourselves and our shareholders that sort of 10-bagger return on our money, and hopefully repeat some of the big successes that we've seen in Australia this year. So Broken Hill is our flagship project. We're in there looking for nickel copper PGEs. We've had some very encouraging early stage results from our drill program late last year and this year. Commonwealth, a big area of focus at the moment for everyone because of the Boda discovery for porphyry copper gold, and we've got some assays due from that in the next couple of weeks. And then other projects at Dunia, we have a walk-up drill target that we're also going to test later this year. And we've also got involved in the emerging nickel copper PGE province near Julimar, which is the Chalice Mining's massive discovery just near here in Perth, and we're very active on the ground there as we speak. So we've been around since 2006. We have 2,000 million shares on issue and 157 million unlisted options. The share price has been hovering about the 1.4 cents, market cap 28 million. And look, if you look at our share price in the last sort of 18 months, obviously post last March, a big rise on our drilling in Broken Hill. And we've been a bit quiet in the last few months as we go from a busy first 3 or 4 months of this year, and we're just about to pick up again, and with 2 major drill programs between now and the end of the year. So a good time to be looking at us in this case. And we've got some very strong support from 2 major German shareholders, family office, the Bunnenbergs, and ADC, who are a major investor in a number of Australian resources companies. So if we look at Broken Hill, it's very well known for its PGEs, although not a lot of volume has been found to date. But one of the standout things about this ground is that it has very high grades of not only palladium and platinum, but also rhenium, osmium, ruthenium, and rhodium, which are part of the PGM group. And most of our work's been focused here to the east of the town of Broken Hill. It's about 10-kilometre scale, and we're one of the largest ground holders in the area. And one of the reasons we've been interested in that ground is that it has some incredible ore that's been discovered previously. This is one of our drill holes from about 4 or 5 years ago, and it's a massive sulfide unit, and it just contains exceptional grades of all sorts of metals. There's 11 grams platinum, 25 grams palladium, it's got 1.5 grams of gold, it's got 15% combined nickel copper, it's also got 1.5 ounces of silver, and exceptional grades of some of the rare PGMs. Now, you can count on the fingers of one hand where you can find these kind of grades around the world. And it's in this massive sulfide unit. It lies at the southern end of this trend, which is about 9 kilometers long, called the Morkai Trend. And there's only ever been drilling down at the southern end of this area here. And the reason for that is that PGM exploration is actually generally quite difficult. And that's because they're generally very fine grained, and you can't detect them with a handheld instrument. You have to send them to the lab, and it just leads to excessive delays and also a lot of oversampling. For example, this rock here comes from one of the PGM mines in North America. Looks very bland, very boring, and it contains nearly 20 grams of palladium and platinum. So it has been quite a difficult thing to explore for, but we've made some exceptional technical breakthroughs at Broken Hill, and we've been able to discover a ratio that has a direct relationship to the grade of PGEs. There's a chemical ratio, and you can measure that ratio with a handheld XRF instrument. And that's allowed us to really make a massive breakthrough. I don't think anybody in the world is possibly doing this in PGE exploration. And it's allowed us to direct the drill program during the active drilling, guide the drill program, and has led to a small discovery at our Platte Central prospect. If you look at the scale here, this is sort of around about almost 1 kilometre in trend. There's been lots of previous drilling, but nobody had been able to put things together. And this is coloured up by our ratio. And really, the ratio above 10 and 20 in through here, you're looking at significant grade for PGEs. And we can see that in this Platte Central area, all of a sudden, we've suddenly lit up this area. We've had a small discovery there. And this is the first coherent zone of mineralisation anyone's ever found in 40 years of exploration. And that only occurred last November, December. So still very early days for us here. And this is what we discovered. It's a small channel-like structure at the base of the host ultramafic, shown here in purple. And everything is within sort of 50, 60 metres of surface. And basically, we used the ratio to identify this high-grade pot of material here, which resulted in a metre at sort of 3.5% nickel, 1% copper, and 22 grams of PGEs. And so I should have pointed out that that massive sulfide that we showed in the earlier slide, if we find a lot of that, it'll be the richest ore in Australia. So that's the Platinum Springs area. The other big area for us at Broken Hill is our little Broken Hill Gabbro. We're particularly excited about this area. It's about, we've got an intrusion here that's about 6.5, 7 kilometres long. It had never been drilled until we started there last year. Every hole that we've put into the thing along the basal contact here on the west has delivered anomalous PGEs, including intercepts sort of 50 to 60 metres of about 0.5 gram of platinum group elements, but higher grades, 12 metres at 1.5 and a metre at 2.3. And this is basically from surface down to sort of 100, 150 metres. And so when you sort of stand back and look at the scale of this unexplored intrusion, you have to think to yourself, surely there must be a significant chance of us finding a major deposit here. So we're about to start follow-up drilling here, probably in the next quarter, which, towards the end of this quarter. So before the end of September, we should be back on the ground here drilling, and we'll have a major program of about 5,000 to 10,000 metres between Little Broken Hill and our Platinum Springs prospect. The ratio has worked very well in both areas, and we think that we've got a really good chance of delivering the next significant PGE deposit. Now, talking of significant PGE deposits, obviously everyone's been focused this year on the Chalice discovery, which is shown here in the map of Western Australia. There's Julimar, Yarrawinda, which Caspian have got, and a few others, Muley-Ion, which Mandrake have got. And we've been able to secure this area here in white. It's called the Arkan Project, which is a long trend. And the day we announced that we had pegged this, Anglo-American corporation pegged 10,000 square kilometres all around us. So we thought that obviously we're in the right area. We've started some soil geochemistry. We've completed that, taken about 600 or 800, I think 650 samples. Those are in the lab from some initial targets we've identified, and those results will be back shortly. And the whole project area is sort of full of very interesting magnetic anomalies, and in particular our bow target shown here on the left. And this is shown at the same scale as the Julimar and Gonaville discovery, which is shown in the middle, and then Newly-Ion with Mandrake Resources, where they're drilling at the moment. And really this whole southwest province is sort of peppered with these types of magnetic anomalies that have never been tested. And I'm sure we're going to see some major discoveries coming through again on top of the Chalice discovery in the next 3 to 4 years. So still in WA, we will be drilling also in the 4th quarter this year on our Dunia target that we acquired last year. It's an 80-20 joint venture with a private group. It's about 25 kilometres away from the Burns discovery in the same terrain. The Burns discovery was made by Lefroy, and it is a new style of mineralisation in this, basically in the southern goldfields. It's an intrusion-related discovery, and it's related to specific magnetic anomalies. And this is our Dunia target in general, and we feel that we've got some very similar magnetic anomalies near surface. There's an untested 2.5 kilometre dimension gold and bismuth anomaly sitting right over the top. And we think there's evidence in the magnetic data for a deeper buried intrusion that's driving all of this. So we think this is a direct analogue for the Lefroy discovery. And we've got some heritage surveys to do, but the tenement's granted, our drill holes are all permitted. We just need to get in there and do the work. So look, and just for one slide, we've got assays due from our porphyry copper drilling that we did early this year. They should be out next week or the week after. We're going to be a little bit more distal to the source than I was hoping, but there's still some significant signs of encouragement there. So yeah, so just to finish, look, it's going to be very active for 6 months as we between now and the end of the year. We'll be back to Broken Hill within sort of 6 to 8 weeks, and move on to Dunia after that, and still got plenty of backup ground to generate targets, which is what Impact's about. And yeah, hopefully this will be the year we deliver the major discovery. So keep an eye on us and watch the news flow. And that's the Impact story. Thank you.
Well, Mike, thank you for the presentation. It's certainly a very interesting story, and you've got a great portfolio of projects. We've had a question that's just come through from a Twitter attendee. So of the portfolio projects you do have, which ones are you most excited about?
Yeah, certainly the Broken Hill is an absolute standout. We think that we've done all the groundwork, and we're quite focused. We've got about 15 kilometres of strike between the 2 major projects. That whole area is dripping with PGEs, and we've just got to keep drilling and do the work to find the deposit.
Wonderful. Well, you're certainly pregnant with news flow, so we look forward to hearing the updates. Thank you for joining us, Mike.
Thanks very much.
So next up, we have a presentation from Martin Holland, Managing Director of Cobre Limited, with the ticker code CBE. I will now hand you over to Martin for more on their copper projects in Botswana and Western Australia.
Great, thanks, Jane. Are you going to share the presentation? I believe you are.
Yes, I'll share your presentation.
Great, thanks. Great, so thanks everyone for joining. In regards to Cobre, it's Spanish word for copper, so it's pretty clear what we're focused on, and also talking about the beginning of the copper super cycle. So we can change to the next page. Thanks, Jane. Great, so from a capital structure perspective, we got around about 156 million shares in issue. We have a market cap at the moment of around about $25 million. We have cash in bank circa around 10 million. We're still owed around $1.4 million from our largest shareholder, being Metal Tiger, which is due to be paid at our next EGM or AGM. We have 4 projects, though on this presentation today, I'm going to focus only on the Kalahari Metals project, which is based in Botswana. So we can change to the next slide, thanks. From the board of directors, it's myself as executive chairman and also managing director, Andrew Sassine as finance director, Michael McNeely as non-executive director, and Michael Addison as non-executive director. So there's 2 words here you don't often see together, one being diversified and the next being focused. So we're diversified across jurisdictions, so being in Australia and Western Australia, and also in Africa. And we're also diversified across the type of copper as well. So we've got VHMS in Western Australia, targeting a sedimentary hosted copper in Botswana, and also copper nickel magmatic sulfides in Gabon, which is on the border of the Congo Craton, though we are focused on the commodity copper. So here it shows a clear path to $15,000 a tonne. We've seen a big increase in copper price over the last period. We set this company up a couple of years ago with a view that the demand and the supply was out of whack. There's also a move here from a no decarbonisation without copper, the green transition without a surge in copper demand. The copper market is also unprepared for this critical role, and the sticky supply threatens to deplete copper stocks by mid-decade. So we believe that that we're in a pretty good space and commodity of choice here. We'll just go to the next slide, thanks. And I'll start focusing here on Botswana. So there's a joint venture that we started in April of this year. There was an extensive amount of groundwork that happened. Due to COVID, we had to hire experts such as CSA Global to do site visits for us and to write certain technical reports. This was all completed, this joint venture, in April of 2021. And we've just recently had a joint venture with Metal Tiger, which is also Cobre's largest shareholder. They're a natural resource fund, dual listed on AIM and ASX, and they own roughly around 20% of Cobre. We're in a 51-49% joint venture with them, and we're the operating controller of the Kalahari Metals Limited Company, which owns approximately about 8,000 square kilometres of the land on the Kalahari Copper Belt. We've approved a 7,000 metre drilling program, which is our first drilling program as a joint venture. And this program is drilling pretty much adjacent to Zone 5, T3 and A4 areas, which has been discovered by Cribbit Canyon and also Sandfire. And interestingly, the Matheo project T3 has recently been permitted and ready to be turned into a mine. So we've got like 2 mines in the making here over the next sort of 12 to 24 months. Strong investment from both the business sector in mine development and government in power infrastructure. So the power lines are already up at present. And this is all aimed at opening up the Kalahari Copper Belt in Botswana. We've got diamond drilling and RC drilling is underway on our project, which I'll take you through. In regards to the Kalahari Copper Belt, the view here is that the belt is still largely underexplored. So the Kalahari Copper Belt remains immature in terms of discovery and metal endowment. So most deposits that were found historically were found on traditional limb hosted on the main redox contact. And what we're focusing at trying to find are these near surface domes, which are open pittable. So we believe that there is room to find another large deposit on this belt. So you can see here in the light green, the land holding that we own, it's quite extensive. We have circa 8,100 square kilometres of the belt, which makes us the second largest landholder in the district outside of Sandfire, which puts us at around about 1/3 of the Kalahari Copper Belt in total. So very strategic holding. You can see here that this is a budget that we approved. We're going to be drilling all the way through the year. We've approved a 7,000 metre diamond and RC drilling program. We've just announced we've completed the first 2,000 metres of drilling. And we'll continue to drill throughout the year. Historically, our largest shareholder being Metal Tiger and also joint venture partners spent around $5 million on geophysical survey, soil sampling, drill target development, and successful proof of concept drilling and development of current drill programs. So a lot of that early hard work and time-consuming work has already been completed, which is a good position for us, as a company entering into the joint venture. Having all that knowledge. So we're now moving ahead with advanced exploration of the area. Some sort of results that have been found in the district, which are just adjacent to where we're drilling at the moment, which was announced recently by Sandfire, was circa 35 metres at 7% copper and 116 grams silver, and 12 metres at 13.3% copper. So you can see that there is high-grade nature in this belt, and also at near surface, which is quite exciting, considering that we're exploring targets that are very similar to that as our neighbours. So getting into a bit of technical sort of analysis here, historically exploration has focused on the redox contact and the mineralisation of fold limbs, so very deep drilling, and that's what sort of like Cribbit Canyon had discovered. These are easier to find using magnetic AEM and soil sampling, but at the end can be deep and not suited to lower cost open pit mining. It obviously helps having the copper price higher, so they do become economic, but we are looking to find higher grade deposits near the surface for open pit is our strategy. So recent exploration is focused on fold-related anticline hinge zones and structurally controlled trap sites higher in the strat, above the traditional redox zone. So it's very similar to that as A4 and T3. So we'll move to the next slide. So historically, in 2020, we completed around, as a company, 1,700 meters of strat drilling. So some deep holes that we drilled there, 3,000 meters of soil sampling, which showed some copper and zinc anomalies above the targets that we've defined. We've had these targets, being structurally designed and completed by experts that have already been involved in discoveries on the belt, which gives us a lot of confidence. I have mentioned our largest shell being Metal Tiger. They were involved with a company called Mod Resources, which they owned roughly around 30% of, which was bought out by Sandfire for around about $170 million a few years back now. So they have a lot of knowledge on this belt, and we have that technical team working with us now to find the next discovery in the area. So this is the planned drilling program that we have here. We started out with a plan of 1,000 meters of diamond drilling and 4,000 meters of RC to start off with, then moving to 7,000 meters in total. We've been a bit slow going from an RC perspective, so we've had a few problems with that rig over the last sort of 7 weeks. So we've been, occurring a slow meter rate from an RC perspective. So from that basis, we've actually shifted another diamond rig in. So we're increasing the amount of diamond holes that we're drilling now in meters, and decreasing the amount of RC holes. This has just got to do with the terrain more than anything else. So the diamond holes are working at the moment, and we're getting through approximately about 30 meters a day. So we'll have some information out on the targets that we're drilling in due course. So this is quite interesting, this area. This area itself has never had any past historic drilling. This is a priority target for us. It's very similar to that, again, as A4. It's very large. You're talking like 20 kilometers long target. There could possibly be multiple domes inside this target area. We've just announced that we've drilled through the first layer, which has modeled up identically to the geophysics that we completed and the aeromagnetical work that's been completed. And there's two sort of important geological structures that you need to identify on this belt, one being the Dakar Formation and the next being the NPF. And in the earlier stages of the drill hole, which are only through sort of 40 to 50 meters of this first hole that we've drilled, we've identified the Dakar, which is quite critical to find that near surface. So that's this area has already been de-risked from a target perspective, and now we continue with further exploration, knowing that we're in the right geology. So from a targeting perspective here, you can see on the left what the domes look like at Sandfire at A4, and you can also see the domes that we're drilling here on the larger image, and they're almost identical to that as our neighbours. So as I said, very, very large targets, very large sort of sedimentary hosted copper deposits that we're looking to discover here, and quite high grade, considering that the world grade of copper being mined at the moment is less than 0.5%. We're looking at finding deposits that are greater than 2%, which is quite attractive in this current copper market. So why the Kalahari Copper Belt? I think there's a standout quote here, is that the Kalahari Copper Belt was rated as #1 in the world for most prospective underdiscovered sedimentary hosted copper deposits by the US Geological Survey. So in my opinion, if you're going to explore anywhere in the world for copper, it's probably a good place to start, being the Kalahari Copper Belt. Our deposits are often giant, so more than 1/3 of the known sedimentary hosted copper deposits are greater than 500,000 tonnes and contain of grades greater than 1%. So as I said, we're targeting greater than 2%. And a significant portion of the Kalahari Copper Belt is hosted in Botswana, so a very safe jurisdiction in Africa. It's rated approximately around 12th in the world at the moment on the Fraser Institute. So a very solid jurisdiction to be in to find a new large discovery. The technical team here is very strong. It's led by Adam Woolridge. We also have Dr. Ross McGowan. I'll touch on Ross quickly. He got the award, which was the Lindsay Award for the discovery of Kamoa, which is Ivanhoe's main project, which Robert Friedland now runs. So he's on our team. David Cattrall, Thomas Rogers as well. So this team itself has had a lot of knowledge, multi-decades of experience on the Kalahari copper belt. So we're very confident with the team that we have to discover the next deposit in this region. So from a news flow perspective, 2020, we did a lot of the earlier work. 2021, we've, as I said, finalised our joint venture. We're well funded. We just raised circa around $7 million at 17 cents per share. We have around $10 million in the bank. It's a joint venture, so every dollar we spend, our joint venture partner spends as well. So we have a lot of money to put towards exploration moving forward. So from a news flow perspective, we'll have our results out at Kit East on the endurance and perseverance targets, also Kit West. So we'll have ongoing exploration over the next period, and plenty of news flow to come. And that's a wrap.
Well, Marty, thank you for the presentation. Certainly very interesting, particularly with the proximity to Sandfire. We've had a few questions that have come through, which I know you did cover, but I will ask them anyway. So how many rigs have you got currently drilling?
Yes, I currently have 3 rigs on site at the moment, Jane. So we have 2 to start off with, and we've just had another one turn up last week.
And I know, again, you did sort of mention this, but when are you expecting assays due? Yeah,
sure. I'll probably just also touch back on that rig question. Sandfire have approximately 15 rigs in operation at the moment. They're using a company called Discovery, and we're also using the same company, Discovery. So we have 3 of their rigs as well. From an assay perspective, what we're doing is we're actually drilling the hole with diamond core. It takes a few days for the core to dry. Once the core is dry, then we XRF-ing it on site. If there is any economic grade that comes from the XRF, we then send it to the lab for assays. So that's the current position that we're currently in. We've only completed 2,000 meters of drilling at present. So we'll have a further news flow in the coming weeks, and more throughout the year.
Brilliant. Well, thank you for joining us today, Martin.
Great. Thanks, Jane. Appreciate it.
And thank you all for joining us today for Broker Briefing Mining and Resources Investor Webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com. We look forward to hosting you again.